It's Tuesday, September 29th, 2015. My name's D7 here at Grok Trade. And the markets are mixed. We have the spider at break even, the diamond's up 0.28%, but the NASDAQ is down 0.51%, down a half a percent. Small caps down 0.66%. So you have small caps, you have NASDAQ, both down when everybody else is up. Banks also down 0.15%. Financials, though, up 0.2%. Silver up about the same as financials. Gold down 0.41%. Crude oil up more than 1%, 1.6%. US dollar break even, and the VIX slightly higher. And here we are. Let's take a look at what's going on here in the markets. We had this big drop on the daily S&P 500 exchange traded fund called the Spider. Nice bounce off of support area. Rally, drop, choppy, but on an increase, giving us a rising wedge, which a small rising wedge at the bottom of a leg is also a bear flag. And here we get a shooting star reversal pattern, comes up, down. And then as we dropped, I was able to draw another line. We have two horizontal lines going down, so now we are in a definitive down trend. Lower swing highs, lower swing lows. And we broke down here. We have continued to drop and drop. Now we hung up right here, and we talked about that yesterday. We have a lot of support here. It'd be interesting how it handles this. First thing, we popped up and down, and back up. Here, spent a lot of time in the lower part of today's trading range, and did at one point go below it. And we had a very good chance of breaking that support level. However, we rallied back. If you'll notice, the shadows are relatively equal. The upper shadow a little larger than the lower shadow, meaning it's a little more bearish than it is bullish, with the body on the lower side of the trading range here. But that is a spinning top. A spinning top can be a reversal pattern for a bounce going back higher. With this level of support, you could find buyers come in. So if we got over 1900 is kind of a crucial number, gang, for the S&P 500, or 190 for the spider. If we get over that, chances are we're going to get a rally here, and we'll run into some resistance at this line, but the question is, what will it do with that line if it gets there? However, if tomorrow we start to break down, we have some long-term support levels, these two red lines at 187.25, 186.26. Those areas are going to act as support. So if we drop and we break both of those, that's good. That could be a nasty little drop to the downside. So what we do know is NASDAQ and small caps were down for today's session. So that is more bearish than it is bullish. The banks were also down. However, financials on the XLF ETF had a slight increase of 0.18%. Just look at the NASDAQ. NASDAQ down, lower high, lower low, dropping. We have a support level coming up that it's going to be interesting to see what it does with that support level. Small caps are almost at a major support level. We've had a sizable drop here. I could see us getting a little lower here, maybe a hammer, and then start to rally back higher. So I see a lot of support coming up. That support cannot be ignored. Silver, there's support. We actually closed above that support line. That was key that it did that. We were talking about that in yesterday's video, that it was so important for it to do that, to kind of save itself. If it went to the wrong side of that, it could have got loosey-goosey to the downside pretty quickly. Gold is continuing down inside this area. this formal symmetrical triangle. So we're back there. This could get ugly and quickly. So something that we're watching. There you have it. If you like the video, like it. And if you want to help your friends, share it. Always subscribe.